Hi, Warriors. Everyone doing all right?
Morning,
Recovery.
Coach.
Hey, hi, Blake. Recovery continuing. How you came in? Hello, Ingmar.
Morning.
Morning. Good morning to you. Gosh. Steve Bartholomew. AJ, Brand, what are you hailing me for today? Oh, just with swords. You, you coming after me, man? Hey, John Hawkins, you live in Hong Kong. How do you like it there? How do you like being partially under Chinese rule? I'm just curious.
I bet I,
Brand,
I bet he loves Kuala Fong. I do.
who's that? Their prime
That's just
minister?
that's where all the expats hang out. At least it used
Uh,
to be.
okay.
Yeah.
All right. You are such a globetrotter. Anyway, Ingmar and
Oh, one
Brand,
shy. Hmm.
uh, uh, Hawkins loves it. AJ and Hugo. Someone else I'm missing? Anybody? Live free or die. All right. John Holter, welcome to Face. You've been around for a while. Astra, how are you? Astra, you said you were going to join. Did you do it? All right. You did. All right, buddy. You
He
walked the
did.
talk.
Actually, he's been a welcome member of our community. He's been chatting it up. It's great. It's
Cool.
great to have him here. I love
Yeah.
I love people that are in our chat rooms. I know a lot of people are in our chat rooms and they're just lurkers, but when you get people in there that are,
Yeah.
talking about things and it doesn't have to be like, "Oh, I'm buying this or I'm selling that," but just like, "Hey, what do you think about the euro here? I think it's the stock market looks a little lofty." Just having those types of
Yeah.
conversations are great, being interactive. So,
Yeah. Yeah. So you're not going to regret it. Okay. That's for sure. So anyway, here's Euro. And I don't know. This kind of looks like us. We want to hold this. These levels here, this blue line that I've had for a while, this was 860, 870 K. I'm kind of in the same position I was yesterday, kind of with you. We could hold here, or if we don't, there'd be a better level. You ever approach a trade when you feel that way, like it could hold, just have a piece on and hope you're early so you could buy a more 100 lower?
Yeah, I agree. But I actually jumped from one horse to another. I bought it yesterday and let it go this morning on the rip higher. Well, not fully, but I'll
You went to cable.
yeah yeah.
I
I
know
think
you.
because I have a bit of interesting support there around 127.1030, and I wanted to test that one.
Yeah.
And yeah, it seems to hold right now. So we are going to remain hopeful that it continues to hold. Um, yeah, we are in a bit of consolidation, hope for better or not for nothing worse. But I mean, the situation is still very, very fluid on everything, right?
But what a bounce off this line.
Yeah. You know what? I was just updating the chat rooms. I didn't even press send yet. I have this longer term, which is actually the pandemic low to the high, right? And the 23.6 comes in at 52, 10, 12, 15-ish, and we
Yeah.
just tagged it there, and that may be maybe an interesting one as well. Um, on the other hand, it did jump well from that 48.15 supporter. Prior
Yeah.
low, trend line, 50% of the last rally, you name it, and that's a really really nice.
I
Um,
know, I was talking to Jimmy yesterday and he thinks this is a four,
mm,
which implies one more break. And then he thinks there'll be a better rally. So I
can't,
guess he's labeling it,
you can't rule out
one,
anything at this stage. Yeah.
2, 3, 4, 5, four of three or something like that. Anyway, very very decent bounce. I guess the question is, are people that got caught flat-footed, and when things happen with velocity like that, not everyone's like us, okay, where we're in front of the screens.
Mm.
They read about it, maybe they heard about it in the news or they checked at end of day. Are they going to want to use any strength to consider that an out? Uh,
I
you
would,
know,
yeah, I would assume we there's still people out there because I mean, if you look
they're
at the really,
stuck. You know, a lot of people are stuck, but a lot of people
yeah,
think
well,
it's still okay. You know,
yeah, it all depends who
right?
you talk about. I think if you look at the real long termers, they will have perhaps seen that 48 and saying like, okay, it holds. We made a retracement. Now we see where we end up later. But well,
And I want to add to this. I actually think a lot of long-term investors, these are levels that they're finding attractive. I don't
maybe.
think it's the right time to be a buyer for like longer term stuff, but I think there's a lot of that going on. So you're probably seeing a lot of inflows down at these levels and probably will for the next couple of days. That would be my thoughts.
Yeah.
The thing,
Well, you
yeah,
know that this was the first 10% dip if you bought it that didn't work because it
Yeah,
ended
now
up
now
being
now you got a
20.
20% dip, right?
Yeah.
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 Because if you liked it there, you definitely like it now, right? Right?
I
Right?
oh,
That's a sales trick, right?
I'm the king of scaling into oblivion.
Yeah, right.
I've done it, man.
no,
Anybody who hasn't tried it?
it's I would call that's what I was saying this morning as well. I think it's all a bit logic because we had this big wave of get me out of everything. We have seen it in equity markets, we've seen it in the bond market, we've seen it in
Even
uh
gold, they even had got rid of their precious gold for a few days
yeah,
and a few
but
$100s.
again, gold, if you look where it held around that prior high, you're talking about the similar kind of situation than you saw in the S&P as well, and it is holding there. And well, I mean, a market is always has two ways, and there will always be people looking to sell, always be people looking to buy. For me, in the longer term, not a lot has changed yet because we have seen these setbacks, and then I'm thinking about what China is trying to do because it starts to look more obvious that they want to guide perhaps the Chinese yuan lower. And I would suspect that Asian players, don't forget that also a lot of them have been slapped huge tariffs on their heads, that they at some point will step in again and buy gold. But I bet it is, just my
Yeah.
view, of course.
Yeah,
We
just getting back to the S&Ps for a second,
Mm.
guys, that um, I would be very surprised with a confirmed low and a 12 reading that this is the bottom. I'd be very surprised.
Mm.
Yeah,
Mark
I'm
has,
with you. And then before we go on, Kman, I'm going to
yeah,
come back to the US dollar CNH. I think that's really when I take over the charts, Dale. I'm going
yeah,
to go into that. I know you want to talk about some other things, but I really want to
okay.
talk about that chart when we come back.
All right, well, I'm gonna just speed through it. Gold, like Kay is saying, is holding. It's my view this was the high, so I'll sell a rally at 30.80. I
Okay.
wasn't surprised by this because actually gold shares were up yesterday when it was getting smashed. Anyone who thinks that this is a low in silver with this kind of RSI reading, I think is going to have a rude awakening. That these are all good trades. I'm not saying being long for these recovery bounces is not the right thing to do if that's what you're trading. But do not think that you bought a long-term low in any of this stuff that you're capitalizing on. I mean, the only thing that I still feel comfortable with position-wise is more in the currency arena, that the trends are defined and you could still go with it. I sold some dollars yesterday. I also shorted yen. I was long for the day, and at the end of the day, I got
You got your
short
level up.
because we rallied right
Nice
back
one.
to we talked about this, Kay,
Very nice one.
yesterday,
Mm.
right? So, I mean, this looks like new lows. Look at this RSI.
Mm.
That's not a bottom either. So I'm saying, look, I scanned my screen yesterday to look for long counter trends, and there weren't many divergences. There were a few, but the majority of things that came off confirmed their lows, meaning that those lows are going to be retested. A high probability of that anyway. And I rest my case. I, ladies and gentlemen of the jury,
Go on, Blake. Go on.
All right,
I
all right,
want
all
you to
right, all right.
come. I want you
I'll
to come in with a verdict that's
I
favorable to me.
you know, that is one profession that I'm really not great at. I'm not
You want to be a
I
lawyer?
wish when I was a kid, when I was younger, my parents would have put me in speech and debate and I could have
Oh,
been a
yeah.
lawyer and
You're
argued my
good.
case better, but you know,
You're
I
good, and you're good, and you overcame stuff, and
I
you're really you have a great voice for media. So you're self-taught and
you know,
not a bad job, bro.
it's yeah, I guess. You know, I want to go back to Kman's conversation about the US dollar CNH, and this is the chart. Obviously, you guys can see this is a daily chart. You can go back. You know, we're talking 2019, blah blah blah, COVID. You
And
know, COVID is over here.
They're going to let it go. That's currency manipulation. Trump's
Well,
going to
well,
call it.
yeah, well that's the risk, right? And I
Yeah,
mean, the risk is, and Kman, I'm gonna get your comments here in 1 second. If this breaks out to the upside, that means China basically released the lever and they're like,
yeah.
"Yep, we're gonna weaken our currency. This is how we're gonna combat it." And that should be a risk off kind of indication, I think, if we get a massive breakout to the upside. What are your thoughts about this chart, and do you think they're gonna let it go?
yeah, I think they will, for one. But I mean, this is what I said on the Flow Show as well. We always have to listen to what's happening, okay? If we wake up one morning and we're trading 737 and a half or 738, will they have sent out their submarines to try and cap it? That is going to give us an indication. But if they don't, we are off to the races, which I think is going to happen. It's whether it
I mean,
is,
Chinese economy is slowing way too much for them not to,
and
right?
they are pumping a heap of money into their economy right now. But
Right.
that is the local economy. They need to get the international trade, which is a huge part of their economy, obviously. They need the international trade to continue to well, they need to export basically. So they are going to probably let it weaken, not so much perhaps immediately driven at the US, because we heard Trump yesterday. He's threatening to slap another 50% tariffs
Yeah.
on top of the existing if they don't react by today. But it's just that they want to export to the rest of the world as well, Europe, Middle East, you name it, And what better to get your exports going on again is to let your currency weaken, and they have a good excuse now, because they say like, well, I mean, Trump wants to kill our economy, so we need to
Defend ourselves, right?
beg
But
your pardon.
they need to defend themselves.
Yeah.
But here's the other thing, K-Man, and I want to get your thoughts on this because if they let it weaken, because okay, let me back up for a second. Venturas, and I'm sorry, I don't want to mutilate your name. Says money exiting China due to tariff war. Yeah,
Mm.
that's what they're going to try to prevent, and this is why they can't let the yuan weakens so much because you will see an exodus of money try to leave China, and they have very few outlets that they can do that. I think it could actually bolster crypto a little bit at these levels, which Bitcoin, if you guys haven't seen, here's our pattern in play. We're holding above the 74,000 level very, very well. So this could really allow for China, like some of the money to continue to come out of China, and that's what they're trying to prevent that, right, K-Man?
Well, yes, that's why I think they are not going to go with a devaluation. They are going to go with That's my opinion. Obviously, they can devalue
Sure.
10% tomorrow, but I mean,
Right.
I don't think they are going to go with a devaluation, but let it slip. And that's why I'm thinking we are not going to devalue Chinese yuan by 10% straight away, but letting it weaken to levels like roughly 780, where the dollar Hong Kong is trading right now, right? The band in dollar Hong Kong is 775, 785, and I think they are going to let it slip.
Just
So
10%, just so everybody knows, that would put the US dollar CNH well above 8. So,
yeah, I think start with 5 and then we will see.
yeah, yeah. Okay. So, or maybe even just a couple percentage points, just allowing it to weaken just a
To
bit.
slip.
It's going to be really interesting to watch, guys. And if that happens, if we do see a breakout of the US dollar CNH, I wouldn't want to get caught long equities at that point either. So let's talk a little bit about equities, and I think we have, oh, Steve just stepped away. I thought he was here. He was here for a little bit. Um, we
Cool.
you know
Okay.
we are seeing a recovery, as you pointed out, Dale, and this is a nice little recovery here. There's a lot of people stepping in. I wouldn't want to be caught um long, and here's the reason why. I'm going to say this because I'm long risk right now. If you guys are in the Forex Analytics chat room, you can obviously go to the trades room and you can see, positions that Kman's putting on, I'm putting on. I just took off my I just took off my dollar max, which means I was short dollar max,
Nice.
long risk from this morning, guys. These are from literally about an hour ago. So if you guys want to see, what positions I'm in and what I'm running, these are them. That's in the Forex Analytics community. Um, I,
Chine
I'm,
Bomb's going to
I'm
want to bring you to their central bank, Blake.
well, I'm positioned for a continued rally and risk, but you don't want to be caught on the long side too, getting too aggressive. And here's the reason why. And I'd like to get you guys' thoughts on here. I do not believe Trump is playing around, and I don't believe this tit for tat is getting bigger and louder, and I don't think Trump's going to back away. And so, we are seeing a recovery. And I said this during the week ahead video. Bear market rallies are sharp, they're aggressive, they're pretty damn convincing. They're convincing enough to where everybody goes, "Oh shit, that was the bottom," and it ends up not being the bottom. And that's what we're dealing with right now. This is a very sharp recovery from, yesterday, and it's continuing. I don't think it's going to last. Now, what are your thoughts here? And let's start with Dale as far as, this recovery goes. How far do we go here, or is this the bottom?
You know, my feelings yesterday was, as far as taking positions, that it's too late to sell, too early to buy. But for a trade, I'm not sure if today is the end of it. But if you just stare at that RSI panel and you see the reading that we got down to almost 10. It almost looks like I know you'll think that I'm maybe losing it, and I did some shrooms, but there's two drives on that last chart.
Oh, okay.
You have those two drives to a bottom in the RSI. There could be one more.
Yeah.
Okay, but there's
I
no
don't
divergence there.
I
No
wouldn't.
divergence.
Yeah,
Yeah.
if we drop to the 38% retracement, which would be 4,600, that's, by the way, that's the long term from the COVID lows, just so
I'm
everybody
hearing
knows.
45, 44 from some of the bears that are adjusting it. But, if we take out 38, if I want to be real bearish, 48, 48 from the high was 13, takes you to 3,500, and that's the October 22 low. That's a potential measured move of a 4,800 breakdown. So, what I'd like to see to be bullish is us break down under 4,800 and then recapture it, and then I'd want to go long.
So
At
if you're
that,
talking about
at
your three drive, you get you one, two, third drive.
eh,
You don't make a new low in RSI, and then you get your bounce, and that's seems
yeah,
logical.
maybe like that. Yeah, maybe
Yeah.
something like that.
That
Yeah.
seems pretty logical.
It's
Not
not as easy now as it was to be bearish over the last few weeks. So
oh no, the easy bearish money was made already. So it's
yes, the
I agree with that.
so you know you could have a crash as part of the decline. It gets it started, and then you just start eroding. You move into a grinding type of bear market until you have time. Um, okay, if it keeps going up, it would have to be back over, you know, I'd say
54.
recapture 50, at least
yeah, we had to get
5,500.
above 5,500 in my opinion. And 5,400 is the 618 retracement of the
Look how
drop.
long it
So
took to top. All right, it was 3, 4 months of distribution before it broke. All
yeah.
right, so we need some accumulation. I think that we don't have an important low until late spring, early summer.
So that's the sell zone in my opinion. If and now here's the other thing I would like to say about that. I think it's me, you, Kman, my uncle, my brother's uncle's sister's nephew, my brother's uncle's sister's nephew, Monkey, and Kitty Cat is trying to sell at 5,400. So by the time we get up here, there's going to be a layered crap ton of sell orders somewhere up here, and I doubt we even get anywhere close. That's going to be my 2 cents. Now, before we go into K-Man's 2 cents going into today and Dale's as well and mine on what I'm going to be looking at for today. I want to say this. The next week, I've mentioned this on the week ahead video, and I'm going to mention to you guys right now. We are going to be offering the deepest special on a monthly, month-to-month membership that we've ever offered. Because of this whole situation we're going into, we're talking to our developers to get the offer out and make sure it's correct, and going through the designers to get all the right stuff for the offers. Whoops, I didn't mean to do that. I needed to go to pricing. This month to month, it will be a significant discount, the most we've ever done. And it's going to lock you in at prices that people have from like 4 years ago, because we grandfather everybody in. So if you were one of our first customers with Forex Analytix and you've been with us for 8 years, your prices are ridiculous. It's about like a fourth of what you see here. But we've never raised prices for people that are with us. You know, once you're with us and once you're on, you can maintain that price. We're going to be offering the lowest month-to-month price ever. But from a percentage wise discount, it goes into effect next week. But that means that if you want to take a trial now. It's $1 for 10 days. This way you can try it out. And then, when we have the monthly offer, then you can take that offer. But this is a great way. This next week is the great time to be utilizing Forex Analytics for $1 just to try it out. And come in the chat room. Come chat with us. The way you get to the chat room is you just go right here next to your name. You'll see this little icon says go to chat room, right? Then you obviously have analysis of, it's not just currencies. We do, the Bund and S&P and gold and Bitcoin and 10-year. I mean, there's a lot of different instruments in here. It's not just Forex Analytics. You got Live Squawk and, risk management tools. You got calendars, nice, analysis from Grega Horvat is in here. So you have the whole kit and caboodle. But go into the chat room, come hang with us for the next week, see if you really like it, and then take advantage of the offer after next weekend. So this is the time to take your $1 10-day trial, because once our offer goes out, you can't do the trial because you'll have to just go straight into the offer. So I just wanted to make mention of that. All right, now Dale, what are you going to do today? Tell me what you're going to do today. I'll tell you what I'm doing today, but what are you going to do today?
Well, what I did today was take profits on what I did yesterday. I
Oh,
sold some dollars and I sold some yen, and I've taken half off, and
okay.
I have still working it, but nothing new.
I
I'm
think
waiting.
today's a consolidation day, isn't it? Isn't it
Uh,
crazy that China's announced this whole they're going to retaliate. Retaliate. We're going to put retaliatory tariffs. They're going to come at us with more. They're vowing to fight back, and yet stocks are actually recovering today.
anyone
So
hear
what's
Gunlich? Anyone hear Gunlich yesterday?
I listened to him a little bit. I was in the middle of doing analysis when he
Okay,
was going live. What did he
all right.
say that stood
Well,
out to
I
you?
mean the way the credit spreads blew out in such a short period of time on
Yeah,
junk, and that this is a deleveraging process. That's why people even sold gold. And when you think about it, last year and the administration, they say that most Americans don't own stocks. Well, last
yeah,
year I had stats that showed the highest level of ownership by U.S. households of stock in history. So I'm
yeah.
sure there are people that don't own them, but there sure are a record amount of people that and they're just poo-pooing it like it doesn't mean anything, like because most Americans don't have a stake in the market. That's bullshit.
Yeah. Well, I do believe that's the reason why gold's going to go down. I
Yeah,
100% agree. That's why I've got yeah, I
deleveraging,
mean,
and
you're going to
that could
sell your
take a
winners.
while.
You got to
That could
sell your
take a while.
winners. Yeah.
That could take months, right? I mean,
Sure.
we built up leverage for with QE and everything for so long. Is
Yep.
it going to end in 2 weeks? I doubt it.
Yep.
That's it.
I agree. And that's why you got to sell into this rally. So, all right, you're exiting positions from yesterday. Kman, what are you going to do today? What are you looking at?
Well, I've got my dollar CNH already. I'm ready to
Oh, so
buy.
you are long and prepared for a breakout.
Yeah, I bought around 732 and a half earlier in the week. Uh,
Ooh, that's a good price.
yeah, it's live in our chat room. For those
Yeah, 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 yeah.
who wonder what we're doing, I bought this absolutely live in our chat room earlier this week. Even I think no later than yesterday morning, actually.
Nice.
Um, but that one, I am looking at that supporting cable to see if it holds around 127.1030. I've got smalls there.
I took a loss in the cable yesterday. I was buying it and when it slipped through the 200 DMA, I ended up getting out of it yesterday afternoon for a little bit of a loss. But you're long because of why? I'm asking just
Well,
curiosity.
if you go a little further out, oh, where are you?
I'm on a
Oh,
now I'm on a weekly chart.
oh,
So you
no,
want
no,
me to go
no,
daily chart?
tighter. Go into the 4 hours or so.
Oh, okay. Here's a 4 hour.
I've
Got it.
got support around 10:30 in the cable there.
Okay.
Um, yeah,
Prior
and
high to the left, Blake.
it's also
Yeah,
a prior
probably
high,
here.
exactly.
Yeah.
Also a prior high there, right, exactly. And so I'm trying to play that today. And that's about it, to be honest, because there's a lot to happen in the next potentially 24 hours. I mean, depending on what China does with those counter tariffs, Trump does with those extra 50% tariffs. There's so much going on that I think we should not spread out too much uh,
Yeah.
on what we are doing. So if you want to play long risk, as you did, you can do it for a while, but don't go into 10 different currency pairs or so, because you can have one adverse message or new headlines coming out that completely wrecks your position, right? So I
Yeah.
I would propose to stay a bit concentrated when I like to have like 10 different positions, but now I usually concentrate on two or three. Chinese yuan will be a little longer, and then perhaps two or three more, and that's how I'm looking at stuff right now, because I don't want to get too spread out, you know.
I'm with you. And I agree. That's why I'm keeping everything pretty light. I think today is more of a consolidation day. Speaking of which, when I was looking at the US dollar Norwegian krona yesterday, I was selling it up here at the 1102 level. It's a 618 retracement. When I got up this morning and it was back up there after having a decent pullback overnight. Basically you can see it was pulling back. And then, when we got up this morning, when I got up this morning, it was at 1097. And I'm like, oh, give me another look. Really, really good risk reward to be on the short side here. So I'm playing US dollar, Norwegian krona back to the short side, and I'm playing the euro inside this triangle. I still am a big euro bull. So I expect the euro to actually break through the 110 level. I don't know if it's going to do it today, but I'm playing it while it's above support. So that's what I'm going to be playing today. And I agree with what Kman just said. This is not the time to be overexposing yourself in a bunch of things, because you saw what happened yesterday. That 10% or 8% swing in the S&P was based on a false headline.
Yep.
It was I saw I was explaining to our traders on the daily roundup show yesterday. And by the way, if you are a Forex Analytics subscriber, not only do you can interact with like Kman and myself and Ryan all day long, but we actually have private shows that are only for our subscribers, like the Morning Edge, which is in 45 minutes, and then the Daily Roundup, which is later on today. I was on the Daily Roundup saying, how these rumors start. If I'm a let's just say I traded JP Morgan or Citi or whatever, and I've got a huge position on, and I need to unwind it. I'm gonna pick up the phone and call my friend at the Cantor Fitzgerald desk and say, hey, did you hear about this? And next thing you know, traders are in chat rooms talking to each other. The next thing you know, some guy that's on Twitter that happens to be on a bank desk puts in oh my God, there's going to be a 3-month pause on tariffs, and next thing you know, you get a 8% reaction because of one dude or dudette starting a rumor. And there's going to be a lot of that going on because people are wrong-footed. There's big positions, and you saw what happened yesterday. That was an 8% move, literally within 15 minutes. So if you happen to be over leveraged and you happen to be in a big position and that goes against you, like what Kman's just talking about, you are up the creek without a paddle. So with that being said, guys, take your trial of Forex Analytix. Remember, it's $1 for 10 days before we have this massive sale starting this weekend. I know you have an interview right now, Dale. So I'm going to pass it back over to you. And Kman, I just want to say what a great job you're doing for the Flow Show. I didn't get a chance to listen to it today because I was in a meeting, but thank you for being there
offense.
For our traders. Yeah.
It's a criminal offense not to listen to the Flow Show.
I know it is a criminal offense, and I should
in
be
the UK. It is.
I should be in trouble for not listening in today for sure.
All right. Well, you bring a note.
All right.
Tomorrow. And thank you, Kay. Thank you, Blake.
Yeah, guys.
Thanks, guys.
All right, guys. Nice show, and what a great time to be talking to Bad Charts One, Patrick Kareem. Patrick, I missed you last time. Blake talked to you. I'm glad I'm
Oh
here.
yeah, good to see you, Patrick, and you guys have a good interview.
Yeah. So these are the days that you've been projecting for many years. You and North Star guys were before the secular change of money flows shifting out of equities into gold, and you showed breakdowns when the ratio was changing, and that was ahead of the crash. Nice work.
Yeah, well, yeah. So, like we know in hindsight, like that was something important, but indeed the gold versus SPX ratio and all these U.S. equities, all the indices, all the sectors in the SPX, they're all in bear markets, pricing gold. But what's really important is the actual fiat denominated. So you could get clues when you start pricing an asset in another denominator other than fiat. Start getting clues where the macro cycles are heading, but you still need like a real bear market in U.S. equities, multiple recessions, or to really instigate a proper capital rotation to generate a truer, longer lasting, higher probability new trend in favor of gold, silver, whatever, oil, uranium. Insert your favorite commodity.
Well,
Maybe
the
I'll.
dollar's been trying to assist in having that narrative be fulfilled.
Yes, the US dollar. We could definitely cover that. I
Yeah.
want to. I don't mind like often, I'm always on the higher time frames there, but I want to show maybe the people watching there the breakdown on the SPX there, how it happened pretty much. We had like this rising trend line daily chart, guys. So on the monthly, this SPX is still above, rising trend line. It's on the higher time frame. The SPX hasn't really broken down any meaningful uptrend, but it always starts. I like saying this. It's all all tops start with a shorter term correction that looks bullish but fails to resume upwards, and then it just cascades, right? And that's how traders get trapped into being investors, and then I'm in it for the long haul, right? Because they're there to trade to make a fast buck. Then there's a consolidation pattern. Let's say here, right before like one touch here, two touch here, three touch here, and now it's going sideways and people it's starting to enter a correction. There's some rising trend lines, it's losing, and then you say, I hope it's going to resolve upwards, so I'll stick around. But then it breaks, and then say, it's going to bounce on this support, right? You're always looking for the support, but you should be looking at the resistance,
Yeah,
and then
so
you're
that's history, and this is also historical. It's the first time a 10% correction
oh
didn't
goodness.
hold, did not work buying that 10% correction.
But you're getting look, the market's really trying right now to bounce because you have all these high volumes events at these bottoms, at these bounces. But you see here, you had a whole bunch of volume here before this appeared into existence. They're back in the first bounce here at 5,500, huge volume. And some people say, okay, that's it, that's the bottom, huge volume on a bounce. But what happens is when the headwinds, there's more headwinds and tailwinds. Those bounces, yes, you get a bounce, but are you going to create a new high? Are you going to break out above previous support turn resistance to create a new low risk entry, a new uptrend resumption? And well, you don't always have it, but look at the crazy volume that came in on this huge move down there. So again, this is a bounce. Will this be the bounce that leads to a new continuation bull market for SPX? Man, we're so far away from that because now you have to at least climb above that 36-day moving average. You have to get back above 5,500. You have to get back above 5,800. Like this could just be a big topping pattern or sideways move. And you just don't want to be stuck in there. You don't want to be hero, say, oh, I bought at 4,800. In hindsight, yeah, okay, maybe if this resumes upwards, okay, great. But this could just be,
Well,
this,
look how long I thought we would have a two-way conversation. Look how long it took to distribute
yes,
on
here,
top before the break.
yes,
So don't we have to go through a reaccumulation phase before we even start talking about meaningful rallies?
yeah.
I don't think we're going to get a spike low and just a V bottom out of here.
Uh,
There's credit spreads have blown out. It's all the other breaks that we've had along your trend line, Patrick. Credit spreads remained tight, and that's why they always recovered. But the way they blew out this time and dramatically, and again, only in 2 weeks, says there's something else going on, like fear of a credit event that the people that piled into junk bonds to get a higher yield didn't learn the lesson. Higher the yield, higher the risk. And if you look at junk now, it looks pretty lousy. It's HYG. Um, so that's where we
check.
could have a problem.
Yes. Well,
I mean,
the yields, they're not those 2-year yields that keep going down there. They're bouncing now, but they're still below. They're downtrending the 2-year yields. The Fed
mm,
tracks like a 36 moving average of that. Um, yeah, yeah. that looks like a break here.
okay.
Also, there. I haven't
Well,
checked.
we do have an attendee that says, yes, new all-time high will be coming from here.
Well, okay. Well, look, what's the advantage? I know people say that, and they say there will be a crash, but melt up first. I keep hearing that all the time. It's like you're on both sides of the fence. Look,
Oh yeah,
in hindsight, you could have let's say there is a melt up. I'm always going to respect the chart. If there's always exuberance, if something happens, that. But until I'll go back to this chart here, guys. Until I cross my levels here, my 5,500, which is previous support and resistance. And then there's even more here. Remember, this is like, it's resistance, guys. People who got trapped here, what do you think they're going to do on the way up? I'm going to wait for the rally to sell because I want to break even, right? So that's baked in resistance. For me, I'm not even going to think about new all-time highs until I get back above. Goodness, guys, at least a
55.
36-day moving average. Why call it so? In hindsight, yes, maybe that was the dip, but why call it now when you don't have the
With no
evidence?
confirmation
Yes,
about
yes,
anything.
the basic premise of chart trading. It's like because all these guys
All
calling,
you have is support held. That's it. That's what you're
yeah,
working off of right now.
it's
So if you
and
want to play that, you're wrong under 4,800.
that's right. And I'll show you the example. Here's the 2008 one. I want to show people how it played out from 2007. Here was from 1500. I should have put the 1500 to what 1400. A huge break of a rising trend line on the daily chart for SPX. Crazy rally, new all-time highs. Then it broke. Then a rally up. Oh, did not do a new high. Then it broke. Then after that, it went sideways and up for a while. No new time highs. No new highs. So now lower highs, what do you get, guys? Lower highs and lower lows.
Yeah.
You get a downtrend, and eventually down. Everybody, look at these volume peaks, just like the exercise I did on the other chart. Every one of these, people say, "Oh, that's it. That's the bottom forever. The new all-time highs, new bull run." But all of these volume peaks just means it's like a localized low, sideways, and look at that low, lower high, and then it just vomited. Oh, even more volume here. Look at that crazy volume. That could be like the volume we're having today, Dale. And then people think this is the bottom here that's going to shoot up.
Right.
But look
And
what
then we go
happened.
through a grinding bear
Yeah.
market for another 3, 4 months,
So yeah, so people got to remember
5 months.
This 2007-8 one. People always think this is the vomit. But the true vomit comes at the end, and there's no proof right now. That's a 36-day moving average, just like on the other chart. There's no proof right now. There's no evidence that where it's off to the races. It could happen. I don't like whatever. It could happen, but to say it's sure to happen now, I don't know. It's just a little early there just to say that, guys. It's
So, I don't know if you heard Gunlich, but he's talked about deleveraging, and there's still plenty to deleverage, isn't there, Patrick? I mean, you can't deleverage all these positions that were based upon QE, etc. Um, you know, and before all the upset came with changing the system, that I remember talking about that U.S. households had owned a record amount of stocks at the end of last year. So, wouldn't you think it's a market like that would take longer than a few weeks to deleverage?
well, exactly. If it's a true, like somebody mentioned to me, I'm not a fundamentals guy, but one of our members, he said Tesla had a price to earnings ratio. I don't know. I remember over 100, 200. It was, it was like,
Yeah.
and then in my head, whenever I hear the fundamental guys, usually isn't it like a 30 to 1, I don't know what's the average there, but then I said that number seems just bonkers, right?
Yeah, and you and I were kind of warning people about NVIDIA going
Ah,
back to
true. I remember
last
that.
year. Last year.
What does that look like? Goodness. Yeah, it's starting to, it lost momentum. Yeah, right here, guys. So NVIDIA, I think it was
It
back
doesn't
here.
look it doesn't look terrible, but
Well, it's
doesn't
in
look
correction mode. So what
yeah.
this means, again, guys, only in hindsight we're going to see the crazy damage. Let me put my measuring tool here. Only in hindsight we're going to say, oh, it went down 56%. It went down. I think here it
Yeah.
was 60.
I
Only in
thought we
hindsight we'll.
could go to 50 or 60.
But look what's
Your red
look what's happening.
line moving average there.
Yes, exactly. At least it's going to go and retag that. Here, that's the
Yeah.
bottom pane, guys. It's my distance from that red 36-month moving average. As soon as you had the momentum break here of that rising trend line, price went up a little bit, but then you're in correction mode. This is what I called, and you probably also noticed that it's like it was FOMO here, FOMO, like everybody AI.
Yeah.
Insert your favorite narrative. it was there. But the low risk entries, they're not there, guys. And look how much time this is going to need to unwind before you get a no low risk. So a correction is price and or time, right? It's about letting that moving average catch up. So it could either go violently down, which gets all the headline news, or it could just be just a sideways grind, and and then you get a move upwards. But until you get a new breakout line, until this is crossed above, it only has 2 touches so far. This thing could just deteriorate. Imagine if it, I don't know, like let's say a worst case scenario, and we look, it could go down this before it resumes upwards. Who knows? And if you look at cannabis stocks and stuff like that, sometimes you never recuperate from this, right? Years later,
Never.
that could be the ultimate top. You cannot assume it's always going to keep going up forever and ever and ever and ever. There's the SPX went sideways for 10 years. Look at the sideways grind there for the SPX there. Look at this, guys. Like, people got to remember, look, SPX went sideways for 154 months. What is that? 10 years? Over 10 years, it went sideways. Here in the 60s, it went pretty much sideways for
Yeah, it did.
137. And I don't want to, okay, here we're very far, but look here. Here it went sideways for 300 bars, 300 months. And this happens over and over. So any one of these corrections could be, in fact, I don't want to scare you guys. It doesn't have to be, but that's what happens to
10
people who,
years.
yeah, why not? For 3 years, 4 years, who knows how long it could last, right? And I'm gonna these sections of going sideways 10 years, I'll show you when they generally happen there. This is where we tie it in with
With the gold.
yes, with pricing SPX and gold. Hold on, SPX divided by XAU USD. Okay, here. Okay, here it is. Put down a log scale.
Yeah.
So here, guys, I have this is gold versus SPX. And when you get these huge capital rotation events, like huge turnarounds, it's mostly because gold is going, well, two things happen. Gold goes up and SPX goes down to initiate it. It goes in a 50% correction at the very least there. Right here, the SPX, even in the 70s, went down 45%, like 2-3 times. It was really nasty there. See, because always people think in binary, Dale, oh, it's a big crash, it's a .com, it's going to go down 90%, 80%. Well, sometimes you could have just like the 70s where it just goes, you get all these down 45% up, then down 45% up, and then down 30%, like just some grueling, all my lines got messed up there. Some grueling price action. But look at here what's happening to SPX price in gold, guys. It's trying to turn over.
Rally.
It's turning over. And whenever this happens in a meaningful way, you cannot trust anymore. It's like the market participants thinking that this 3% correction in the, or 5 or 10% or 15% correction in the SPX will not be the end of it. It will be something more nefarious if that continues to roll over. It's and look at this long-term line there. Well, it's not there yet. Okay, we're far. Is it Mount Sale? Yeah, that one's far away there.
That looks like a failing rally from the 2000 high.
Yes, it could be exactly. That's another way to see it. It's a here you had a bull run.
Yeah.
And then after that, it tried to go up, and now it's just it cannot match its
90s.
Yeah, look, it's halting around here. There's a wall here. Resistance, a whole bunch of congestion, support.
Right shoulder, it could be a
Yeah.
shoulder.
Oh goodness.
Be anything. Yeah.
At the very least, it's not bullish, right? It's not.
Yeah.
Whatever bullish momentum it had since 2010, it's halted, right? It's
a short to me.
well, yeah. Why not? Why not?
Wrong over those highs.
Look at that. If you cannot climb above this, if you cannot climb back above this, then even if SPX goes up in fiat denominated terms, you're still better to hold gold because gold is outperforming.
Right.
Is outperforming the SPX,
so
right?
Let's go to your wheelhouse. Let's talk a little bit about gold. So, gold reached a lot of long-term targets for some people, and they called it. Some people are calling it a wave 5. we're I'm thinking that I don't know what levels, but if this deleveraging takes some time, we're rallying here in gold. But I still think I'm looking to short this rally in gold. I was short Newmont last week. I think that we could pull back to maybe 26, 2,500 over into the summer. What do you
Yeah.
think?
Well, 2670 right now is a 12-month moving average. Uh,
Okay.
here's the distance from the 3-year moving average. Look how stretched we are. We've
Yeah,
been saying
real
for a while
stretch.
there's no low risk entries for gold. And
Yeah.
if ever it loses this rising trend line on the distance from moving average, that means it's gasping for air. It can't go up as fast anymore. And look historically,
Uh,
whenever you've had these
oh, great
that
lows.
stretched, it
Yeah.
goes in the correction mode. Look, it went sideways
Right.
for a
Yeah.
year. Look at that. This was a GFC event. It actually went
Right.
corrected all the way down to the 3-year moving average. Here, well, that was a top, right, sideways and then
Yeah.
down. But
11 for 9 years went
yeah.
sideways.
So
Yeah.
look where we are here. We even
But you
corrected that.
guys never let go of your conviction on this. You had to deal with impatient followers. When's it going to happen? When's it going to happen?
Yeah.
Let me. Have you had a deafening amount of applause now that it finally happened? Do people at least acknowledge that your work uh, was foretelling a major shift in the market that manifested? Or because I will.
Well,
Okay? I will.
yeah. Thanks. We don't. I never. Sometimes I talk with Kevin and look that played out, but there's a whole bunch of stuff that some roadmaps that we do that never they don't materialize. But we did get feedback there from our members that they were happy that they avoided all that
Yeah.
market turmoil. But
Carnage.
this is the idea. When we see us, it's all about identifying low risk entries. And
Yeah.
even here, when we were stretched from the moving average, and even if price of gold, let's say we started telling our members, well, gold stretch at 2,800, 2,900, there's no low risk entry. Even if gold went up to 3,300, it still did not make it. It does not make you wrong to say that there was no low risk entries. So, if ever there's a correction that comes, that later on people say, ah, yes, cool. Um, you were right, but sometimes you could get stretched and more stretch and more
Yeah,
stretch,
you
and
could.
but it doesn't make it wrong that you took profits. The idea is if people who want to hang on when it's stretched is because they did not enter low and at the proper breakout moment when it was look how I must have shown you this chart a million times.
Yeah.
Look how coiled and tight it was in June of 2019, breaking out. So if you buy here when it's stretched, you're not looking to enter. You're fine taking profits after you've run up from whatever 1,300 all the way to 2,000, or if you bought here low coiled and tight, exploding,
Yeah.
and if you bought wherever at 2,000 and then you're stretched and you sell at 2,900. You,
Where do your
you
two moving averages come in? Oh, I see. 2460, 2670. And
2670. So if you think, yeah, it's highly probable there because look at that. It's there's probably some rising trend lines there. So that would
yeah.
probably be the first place to look at. Oh, it's so tight.
Okay.
So that rising trend line, maybe. Then after that, you could go sideways, and yeah, if ever you lose that rising momentum here, then after that, it could be something really,
All right.
to
I have to ask you something, and it's something that I brought up being a dollar bear last time I was on with you guys. And it's something that's a new regime change. I tell me if you agree with this statement. A weak dollar being risk on is dead.
okay, risk on for U.S. assets, right?
Yeah.
Well, yeah, they don't.
Is it dead? No, I don't need. Is it alive or dead?
Is that
Or is it
narrative?
dead for a while and will rise from the ashes?
Oh, it's
I think it's dead. Overlay the dollar on the Qs.
That's right. Oh, I have SPX. Is that okay?
All right. Yeah, that's okay.
Yeah. So here, and that's the thing is, look at all this data there. Goodness. Sometimes, look, U.S. equities. Look at that here. The U.S. dollar plummeted, as the SPX kept going up. Here, you have both of them going up together. Crazy, right? One of the craziest runs we've ever had in stock market. The US dollar was going alongside the the
Yeah.
stock market.
Oh, so yeah, so it changes.
It changes. Yeah,
But
yes,
I'm
it
saying
fluctuates.
now,
Yeah.
but
Uh,
I'm saying the new regime, because a lot of people kept getting wrong-footed. They'd see the market getting hammered. They go, "Oh, I got to buy dollars." No, you got to buy euros now. That's why outside markets are outperforming the U.S.
yes.
I think they even held up better during this carnage.
Well,
So that I hear is also a secular change from guys that have seen this before, Patrick. That
look.
uh, we went through all those years of outperformance compared to foreign markets. Now we've reversed. Okay, so is that the dollar and
Yeah, well, look, it's crazy
S&P?
because the,
Yeah.
the dollar has been going up with everything since 2009. Look at that. It's been going up with the markets overall. So it's all about time frame, right? Because there's 100% uncorrelated contradictory behavior in between both of those, the DXY and the markets. On the like on these, there's shorter cycles within that. But look, since 2009, even here, it's they've been going up together essentially. Crazy.
Huh. Well, that was U.S. dollar, I guess, exceptionalism.
Well,
So maybe we're going back to reverting to the 2000 trend.
yeah,
Um,
we'll see. It's hard to trade that. Like, as if I'm a trader and the correlation's not super high, it's giving me a clue that I'm not looking at the good correlation. It's like some people looking at the gold price and then they look at the silver price and then they say, well, how come silver's not at all-time highs like gold? But
well, okay, that's a good one. Has the gold silver ratio peaked up here at 110?
uh,
Certainly surprised me when it started blowing off like that.
yes, I spotted that a while back there, and that's one of the clues, seriously, that we were starting to get worried that there was going to be some type of event because when there's a spike, it's like a 2020. Look, that's a GFC one. It didn't do it so much in the 2000. The 2000 was kind of just a gradual gold outperforming silver, gradual crescendo, and then it went down. So we don't know yet. Look, we're gonna have to wait for the monthly close. Remember, you want to remove that noise,
Yeah.
guys. Tariffs one day, no tariffs the other day. This. It's all nonsense.
It looks a lot like the dollar did. If you put a same time frame dollar, a
Yes,
monthly,
yes.
it's
The
the
D,
same thing. The
yeah,
dollar had that one more pop up there.
yeah. The
Look at
US
that.
dollar tracks a lot the gold silver ratio. Not always, but the ebbs and flows of it. Here, I'm just gonna move it up and down. Look at that. Look here, look in 2008. Look how it tracked. So
Yeah.
essentially, what it's telling you is when people selling off U.S. equities risk off, even if the short-term yields are going down and there's downwards pressure for the U.S. dollar versus other currencies, there's so much selling off in the US markets that people are holding dollars instead of anything else. And the US dollar shoots up relative, gains strength. And when gold to silver ratio spikes up, it's silver is like a risk off, it's like a risk sensitive metal, whatever, industrial, whatever you label you want to put it. And gold holds its value better. So when you have the ratio of gold to silver going up, essentially gold might be going down, but silver is going down more, and that's risk off. And look at that here; it's almost perfect correlation. And look, it happened here in the 2000 in the
Right.
March Madness, and it happened here again. So now you have a contradiction here. The GSR is telling you that the DXY should be going up, or the
Yeah.
DXY is telling you that
This is peaking.
this is peaking exactly. So you got to look
Yeah.
at both. You got to look at both right now.
Yeah.
Look at that, but the DXY
I'm
is
with
not.
this peaking. I say take that 110 pieces of silver. But I said the same at 94.
Well,
Anyway, uh,
yeah.
I'm always early, Patrick. If I'm on time, I feel late. Uh,
You played it too
anyway,
close, right?
anyway, what's the best way for people to see
Oh,
you and Kevin, keep up with your work, become a subscriber,
sure.
the whole matzo ball?
Yeah, well, guys, you could go on the Bad Charts One there on Twitter, and you could follow. There's a whole bunch of good stuff in there. And if you want the in-depth analysis and all that, and we answer your questions, or we do your chart requests and all that, well, it's on northstarbadcharts.com. Of course, paid membership, but
Yeah,
it's
it's very reasonable.
yeah,
It
yeah.
is.
It's I think it's the best value in the industry, but you know,
Well, you're objective. Why can't you express your objective opinion? Anyway, I think they're very good.
thanks,
And
Dale.
um, it was great talking to you. I'm glad I didn't miss you this time, Patrick.
Goodness, so fast. Time flies
Yeah,
by so fast. You said
yeah,
it's. I looked at my calendar. I said it's already been 3 months since the last time.
yeah,
It's crazy.
yeah. Well, money comes and goes. Time is gone forever.
Oh my
Make it
goodness,
count. Make it count, bro.
that's right.
And that's coming from an old man. So
Yikes.
have a great quarter, Patrick.
Thank you, sir.
Keep guiding people and find your opportunities and keep drawing your lines, bro.
Thanks, Dale.
All right, Patrick Kareem. Follow Patrick on X at Bad Charts One, and they do some great technical work, and a lot of people follow them. They get lots of what they call it, interaction or engagement on what they put out. So everyone have a great day. Remember, don't just count your shares or your coins or your ratios. Count your blessings. Have a great turnaround Tuesday. And I will see all you guys tomorrow. Could join the team on the Morning Edge. Thanks once again, my trading warrior brother. Talk to you soon, Patrick.
Take care. Bye, Dale.
All right, that's a wrap, everyone. Adios.